We're entering the most dangerous economic period in 100 years. Those aren't my words. Those are the exact words of Ray Dalio, the man who predicted the 2008 financial crisis 6 years before it happened. The man who built a $160 billion hedge fund by understanding something most people never see: economic cycles. Right now, he's sounding an alarm that should terrify you. But here's what's even more important. It's not just warning. He's showing you his exact moves. 3 specific investments he's pouring billions into right now. Not stocks, not bonds. 3 assets that have preserved wealth through every empire collapse in history. And if you understand why he's buying these 3 things, you'll understand exactly what's about to hit the global economy over the next 3 to 5 years. Let me be direct. Ray Dalio doesn't speak carelessly. When he founded Bridgewater Associates in 1975, he was working out of a 2-bedroom apartment. 48 years later, it's the largest hedge fund on earth. But the size doesn't matter. The track record does. From 1991 to 2020, Bridgewater returned 12% annually after fees, while the S&P 500 returned 10%. You might think that's not impressive, but here's what matters. Bridgewater did it with half the volatility, lower risk, higher returns. That's not luck. It's understanding how the machine works. Asterisk. And in 2002, 6 years before the world understood what was coming, Dalio wrote a research paper. He explained exactly how the housing bubble would collapse, how subprime mortgages would default, how the contagion would spread to banks, how the Federal Reserve would have to print money, how gold would rise. Everything 6 years early. When 2008 hit and the market crashed 57%, Bridgewater made 14%. Positive returns while everyone else drowned. That's not prediction. That's pattern recognition. And the pattern Dalio sees right now is the same pattern that destroyed Rome, collapsed the British Empire, and triggered the Great Depression. 3 forces converging at once: massive, unpayable debt, geopolitical conflict approaching war, and internal political division reaching civil war levels. This exact combination appears once every 75 to 80 years. And it's here now. Let me show you the debt trap first, because this is the foundation of everything. The United States owes $36 trillion. That's 132% of GDP. To put that in perspective, at the peak of the Great Depression in 1933, U.S. debt to GDP was 260%. We're at 132% and rising fast. But here's the killer. Annual interest payments on that debt just hit $1.2 trillion. That's bigger than the defense budget. Bigger than Medicare. The single largest line item in the federal budget is now interest on money we borrowed in the past. And with interest rates at 5%, those payments are about to explode. Within 2 years, interest payments will exceed $2 trillion annually. Within 5 years, they could consume 40% of all federal tax revenue. That's not sustainable. That's not manageable. That's mathematical collapse. Now, when a government faces this situation, they have only 3 options. Option 1, default. Tell creditors you're not paying. This destroys your currency and your credibility instantly. Option 2, austerity. Cut spending drastically, raise taxes, cause recession and social unrest. Option 3, inflation. Print money, devalue the currency, repay the debt in dollars that are worth less. Throughout history, governments always choose option 3 because it's the least visible. You don't announce you're defaulting. You just print money, create inflation, and silently confiscate wealth from everyone holding cash. This is what happened in Weimar Germany, Argentina, Zimbabwe, Venezuela. Every hyperinflation in history followed the same script. Unpayable debt. Government printing. Currency collapse. And the people who saw it coming and moved into gold survived. Everyone else was destroyed. Ray Dalio has studied every one of these collapses. He wrote a 400-page book documenting debt crises over 500 years, and he's found that the pattern is mathematical. When debt exceeds 130% of GDP and interest payments exceed 15% of tax revenue, the system breaks within 3 to 5 years. We crossed both thresholds in 2024. The clock is ticking. But debt isn't the only force. The second force is geopolitical conflict, and this one's accelerating fast. The United States and China are in a Cold War. Not a trade disagreement. A Cold War. Technology restrictions. Military tensions over Taiwan. Naval confrontations in the South China Sea. Economic sanctions. This is exactly the pattern that preceded World War II when the US and Japan competed for Pacific dominance. Sanctions escalated. Military incidents increased. And eventually, war became inevitable. Asterisk. Dalio sees the same trajectory now. When great powers compete for global dominance, the competition always escalates. We're currently in the economic warfare phase. Tariffs, sanctions, technology bans. The next phase is military incidents. Near collisions, warning shots, shows of force. And the phase after that is direct conflict. We're not there yet, but we're moving in that direction. And when war combines with a debt crisis, the economic damage is catastrophic. The government has to borrow more to fund the military. The Federal Reserve has to print more to keep rates low. Inflation spikes. The currency collapses. This happened in every major war throughout history, and it's about to happen again. The third force is internal conflict, and this might be the most dangerous. Political polarization in the United States is now at levels not seen since the 1860s. Right before the Civil War, wealth inequality is at 1920s levels. The top 1% owns 40% of all wealth. The bottom 50% owns 2%. When inequality reaches these extremes, societies fracture. Populism rises. Extremism grows. Trust in institutions collapses. And eventually, the country either reforms or fragments. Dalio has a tracker for internal conflict risk. It measures wealth gaps, political division, social unrest, media polarization. The U.S. score is now in the red zone. The zone that historically precedes revolution or civil war. Not saying war is inevitable, but saying the risk is real. And when internal conflict rises while external war looms, while debt explodes, empires collapse. This is the pattern. And all three forces are converging right now. Asterisk. So what is Ray Dalio doing about it? He's not sitting in cash. He's not hoping it blows over. He's positioning aggressively into 3 specific asset classes. And he's been very public about it because he wants people to understand. Asset number 1 is gold. Physical gold. Not gold mining stocks. Not gold ETFs. Physical gold bars and coins that you own and control. Bridgewater has allocated between 5 and 10% of its entire portfolio to gold. That's $8 to $16 billion in gold exposure. And Dalio personally owns gold. He's said in interviews that every investor should hold 5 to 10% of their wealth in gold as insurance. Not to get rich. As insurance against currency collapse. Here's why gold works. Gold has no counterparty risk. When you own a bond, you depend on the borrower repaying. If they default or print money, you lose. When you own a stock, you depend on the company performing. If it fails, you lose. But when you own gold, you depend on nothing. Gold is an element. It can't be printed. It can't be created by central banks. And it's been recognized as money for 5,000 years. Every fiat currency in history has eventually collapsed. The Roman denarius, the French assignat, the German mark, all went to zero. But gold remained. During Weimar Germany's hyperinflation, people who held marks lost everything. People who held gold preserved their wealth and bought assets for pennies. The same in Argentina, Zimbabwe, Venezuela. Every hyperinflation proves the same point. Gold holders survive. Currency holders are destroyed. Right now, gold is trading at $2,700 per ounce. Dalio expects it to reach $5,000 to $10,000 over the next 5 to 7 years. Not because gold is going up, because the dollar is going down. When the Federal Reserve starts printing trillions to cover the debt crisis, inflation will spike to 15, 20, maybe 30% annually. Gold won't double because it became more valuable. Gold will double because the dollar became half as valuable. This is what happened from 1971 to 1980. Nixon closed the gold window, making the dollar pure fiat. The government printed money to fund the Vietnam War. Inflation hit 13%, and gold went from $35 per ounce to $850, a 24 times increase in 9 years. Dalio expects the same pattern now, except the debt is bigger. The printing will be more extreme, and gold will go higher. This isn't speculation. It's mathematical. When currency gets debased, gold reflects the debasement. Asterisk. Real estate works the same way. Rents rise with inflation. Property values rise with inflation. Your wealth is protected. Commodities work too. Oil, wheat, copper. They're priced in dollars. When dollars lose value, commodity prices rise in nominal terms to reflect the currency's decline. Dalio studied every inflationary period in history. The Cherishers, Weimar Germany, Argentina. The pattern is always identical. Financial assets denominated in currency get crushed. Real assets hold value. This is why he owns inflation-protected assets. Not to get rich, to avoid getting poor when the printing starts. Now, let me show you the timeline, because Dalio has been very specific about when this unfolds. He said in interviews that the crisis period runs from Arsen Ling Arsersan to Arsen Ling Arserbad, 5 years. We're 2 years in, 3 years remaining. Here's how it breaks down. Arsen Ling Arsun to Arsen Ling Rc was the setup phase. Inflation to Bifended and Arsen Ling Arsar. Then came back down. The Fed raised rates to Bifended Wove. Market stayed elevated. Most people think the danger passed, but smart money was positioning. Dalio moved heavily into gold, China, and tips during this window. Artshandling Arser Wu2, Artshandling Arser Loop is the crisis phase. This is when the system breaks. The debt burden becomes impossible to service at current rates. The government faces the choice: default or print. They choose print. The Federal Reserve cuts rates back to 0. They launch QE Wove, QE Low, 5 to 10 trillion printed over Shabbat months. Inflation returns. Not Bifendid R, 15 to Bifendid R Sir War. The dollar falls against gold, against commodities, against other currencies. Stocks might rise nominally but fall in real purchasing power terms. Bonds get annihilated. This is the pain phase. The phase where wealth transfers from those holding paper to those holding real assets. Pamd Arsen Ling Arsha T2, Arsen Ling Arsherbot is the reset phase. The debt has been inflated away. The currency has collapsed relative to gold and commodities. The government imposes a new monetary system, maybe partially gold-backed, maybe a central bank digital currency with spending controls, maybe a complete restructuring. The crisis stabilizes, but at a permanently lower standard of living for most people. Those who held dollars lost, luxers to buy from the teasers of their purchasing power. Those who held gold and real assets preserved their wealth. The system resets, and the next cycle begins. This is Dalio's timeline. It's based on studying every empire, collapse over, Wu-bat years. And the pattern always unfolds over 5 to 7 years, from the initial warning to the final reset. Let me address what you're probably thinking. Ray Dalio has been wrong before. Yes. In Arsene Isher, he predicted massive inflation from quantitative easing. It didn't materialize for over a decade. He was early. But eventually he was right. Inflation hit, Bifended Join, Artshandling Arsharar. Being early isn't the same as being wrong. If you position for inflation in Artshandling Isher, you underperformed for star years, but you survived when inflation finally arrived. That's the point of preparation. You might be early, you might look foolish for years, but when the crisis hits, you're the only one standing. Here's what you need to do. This is the 3-asset allocation based on Dalio's framework. Asset 1, gold. Target Sir2 Stirwool of your portfolio. Physical gold if possible, coins or bars stored securely. If you can't access physical, use a reputable gold ETF. But understand that ETFs have counterparty risk. Physical gold has none. Asset 2, emerging markets with China exposure. Target Sir2 Arsers. You can buy emerging market ETFs that hold Chinese stocks. Look for funds with heavy China weighting. This gives you exposure to the rising power as the US declines. Asset 3, inflation-protected assets. Target Sirwarto Arsawar.tips bonds. Real estate if you can afford it. Commodity ETFs. Anything that adjusts with inflation. Total allocation to these 3 categories should be Sansirwarto, Bavended Lixirs of your portfolio. Dalio runs about, Bavended Sister Wu. The rest should be in cash for, local months of expenses, short-term treasury bills earning interest while you wait, and quality dividend-paying stocks. Companies with pricing power that can pass inflation to customers, utilities, consumer staples, energy, not speculative tech stocks with no profits. This portfolio is designed to survive currency collapse. When the dollar falls, gold protects you. When the US declines, China exposure protects you. When inflation spikes, tips protect you. When everything crashes, cash allows you to buy assets at cents on the dollar. This isn't a get-rich strategy, it's a preserve wealth strategy. Because in a crisis, preservation comes first. Getting rich comes later when you deploy preserved capital into crashed assets. Let me show you the warning signs Dalio is watching right now. First, the yield curve. It inverted in Artsenling Arsarar, stayed inverted for 2 years and uninverted in September Artsenling Ardersuth. Historically, recession begins low too, Shabbat months after uninversion. That means March, Arsenling Arshawu, to March, Arsenling Arshalok. Second, the behavior of credit spreads, the difference between safer bonds and higher risk bonds has been changing since late Arsenling Arsursan. When these gaps widen significantly, it often signals that investors are becoming cautious about future conditions. By mid-Arsenling Arderseith, the spreads had moved past levels that typically draw attention from analysts. Third, global tensions have increased in various regions, contributing to a more uncertain economic environment. Fourth, domestic indicators, such as economic inequality and social division, are showing elevated levels that can create instability. Then, historically, when debt grows rapidly at the same time that external pressures rise and internal conditions weaken, economies can experience. Some analysts believe these dynamics are aligning today. Ray Dalio, a longtime investor known for studying long-term economic patterns, has spent decades analyzing cycles, economic, social, and financial. His research focuses on how major shifts tend to repeat over time. According to this view, current conditions may indicate that the global economy is entering a transitional phase. He suggests that market conditions can change before most people notice, and that being prepared early is more effective than reacting late. While markets still appear strong to many, underlying signals are prompting some investors to review their strategies and consider how to navigate potential future volatility.